Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod. The White House about to slap tariffs on Chinese electric vehicles. But is it too much, too late? Investment banker and one-time Treasury official, Evercore's Roger Altman.
How helpful are tariffs really? Because at the margin, they're inflationary.
And Warby Parker's co-CEOs on the hip glasses brand still being all about the brick and mortar. Dave Gilboa.
We are seeing the majority of our growth coming from stores.
And Neil Blumenthal.
The vast majority of folks in America want to go into a store, want to try on glasses, and buy them in person.
Plus, what is the deal with graduation protests? GameStop's roaring kitty breaks his silence. And OpenAI's big day and possible big deal with Apple.
How does Microsoft feel about all of this?
For years, all they wanted was for Bing or anybody to use their services.
It's Monday, May 13th, 2024.
Quote, feels like magic to me.
Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning. Welcome to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Joe Kernen and Andrew Ross Sorkin. And on this Monday morning, we are looking at U.S. equities. After the best week of the year for the Dow, it was up by more than 2%. S&P was up 1.8% last week. The NASDAQ was up by just over 1%. In fact, for the year to date, the Dow is now up by 4.8%. The S&P is up by 9.5%, and you've got the NASDAQ up by almost 9%.
Meantime, OpenAI is planning to announce a product update in a live-streamed event that's going to happen today, 1 p.m. Eastern Time, much anticipated among the tech community and beyond. CEO Sam Altman posting on X that they will not be launching a search engine or the next version of ChatGPT, but that they've been working hard on some new stuff they think people will love and, quote, feels like magic to me. According to news site The Information, the OpenAI is working on technology that rolls audio, text, and image recognition into one product and could employ those capabilities for an advanced voice assistant. And separately, or maybe not so separately, you'll start to see how these things are coming together now. Apple reportedly near an agreement to use OpenAI in its technology on its next generation iPhone. That would allow Apple to offer the popular chatbot as part of a suite of new AI features that we're all anticipating are coming next month. The big issue there, by the way, just to understand the sort of back and forth of this, is OpenAI now processes all of its queries, if you will, in the cloud. And one of the things that Apple has liked to do for privacy reasons and other things is to query a lot of what you do even on Siri these days. It's actually quite amazing that it's not actually reaching out to the internet all the time for it on device, meaning actually processed on device. So the question is going to be, is there a clever way that some of the OpenAI technology actually ends up being done on device? If they're able to figure that out, it'll be a very sort of neat little magic trick.
And we're expecting to hear all about this in the next month or so?
In the next month or so, and then there's the other piece. The other piece of this is we'll hear about that at the developer conference in June.
Yeah.
But then the other piece of it is, does Google, which has the search engine or search button right now on Safari, stay there, and do they end up using Gemini? You remember there were some reports saying that Gemini was going to be involved in this. It's possible, by the way, that maybe Apple will do some kind of mix and match kind of system where they're using some Google stuff here, using some OpenAI stuff here, and maybe that's going to be the great benefit for Apple because they actually don't need necessarily to do it all themselves, at least not yet.
Yeah, and then they have an AI story to tell. How does Microsoft feel about all of this? Because Microsoft, with the big chunk of OpenAI that it owns.
Well, I think the answer is that they should feel great about it.
Because then Apple has to finally use theirs.
Because they get the benefit of it. They've been, for years, all they wanted was for Bing or anybody to use their services. Having said that, they're not really in control, or they would say they're not in control of OpenAI.
Supposed to be.
They're not supposed to be in control of OpenAI, and OpenAI is supposed to be a third-party independent company.
Yeah.
So this is actually how a third-party independent company would act if, in fact, Microsoft is not controlling it, hopefully. But you're right. Maybe there's going to be some products or services that are not offered. I don't know.
That are unique to Microsoft? Because Microsoft has done so well because of what it can do with AI.
Right.
I guess it'd be great to be the platform that's supplying it to Apple, too. But you start to wonder.
I don't know. I don't
How
know
they
how that
actually
will
feel
work.
about it all.
We'll see. We should also tell you that in some other Sam Altman related news, it doesn't stop. Shares of nuclear fission company Oklo began trading on the New York Stock Exchange on Friday. And yes, like virtually every SPAC in the world, they plunged 54%. The company went public via a combination with Altman's SPAC, Alt-C. Altman now serves as chairman, and Oklo's business model is based on commercializing nuclear fission, developing small-scale nuclear reactors that could power advanced data centers. The company targeting 2027 for its first plant to come online. It's a hugely ambitious project, and like so many of these hugely ambitious SPACs, if you will, I mean, you could say Virgin Galactic was hugely ambitious. A lot of these things are very binary. They're either really going to work or they're really not going to work.
Except for your favorite, which
you
is
really won't know.
Your favorite's working again.
Which one's that?
DJT 51 today.
Right. That's a different. I don't even put that in.
I don't know what to call
it's
that.
It's not even in that same. I didn't even think about that because it's not even in the same category.
Right. It was a SPAC. It's one of the SPACs. That's what is that? $7 billion. Workers at an Apple store in Short Hills, at the Short Hills Mall, it's in New Jersey, have voted against unionization. It's my Apple place. Where are there really chargers that I can get them?
Who was telling you this? Steve Kovac was telling you to use something else.
To use a different charger.
But
I can't imagine.
You got to be careful.
You plug them in and it says, "Do not use this. This is not."
You want to start a fire or something.
No, exactly. Yeah. Union organizers filed complaints alleging illegal union busting by Apple. They blamed the defeat, though, on the company's behavior. Apple has repeatedly denied any wrongdoing. Meanwhile, though, workers at an Apple store in Towson, Maryland, who previously had voted to unionize, now have authorized a potential strike. The union there says Apple has refused to fairly negotiate. Apple says it's going to continue to engage with the union representing those workers respectfully and in good faith.
Shares of GameStop, they are soaring this morning, and one of its most prominent backers is back. Keith Gill, also known as Roaring Kitty, made his first social media post on X in 3 years. Gill's bullish analysis of GameStop helped spark, if you remember, that big meme craze back in 2021. The post was an image that appears to mean he's sitting up and paying attention. And that's pretty much what we got.
All it takes.
Apparently. Yeah.
A lot of you are thinking, I can't believe they invited this guy. Too late.
Protest erupted at Duke University's graduation ceremony yesterday, just as comedian Jerry Seinfeld was set to deliver the commencement address. He was met with a wave of boos as some graduates walked out at the start of his speech. Seinfeld has been vocally supportive of Israel and visited the country following the October 7th attack. Seinfeld was later able to deliver his speech uninterrupted. I think it was only something like 30 students who walked out, not a major number of them, but it did make some headlines. Also, pro-Palestinian protests disrupted several other graduation ceremonies, including one at UC Berkeley. And in Los Angeles, protesters clashed with police outside of Pomona College's ceremony as well. Separately, Citadel's Ken Griffin is calling on Harvard University to embrace Western values. In an interview with the FT, he said that the turmoil sweeping across college campuses was the product of a cultural revolution in U.S. education. Griffin is a Harvard alum and has given more than $500 million to the university. He said in his words, "The narrative on some of our college campuses has devolved to the level that the system is rigged and unfair, and that America is plagued by systemic racism and systemic injustice." In January, Griffin called Harvard students whiny snowflakes and said that he was pausing donations to Harvard over its handling of anti-Semitism on campus, which he blamed on Harvard's DEI agenda.
Yeah. Didn't all start October 7th, obviously, but he's right. But here's a novel idea for Harvard. How about embracing Western values? I like that.
Cheese will be next.
Coming up on Squawk Pod, stubborn higher prices impacting the economy and how everyone feels about the economy. From the data-happy Federal Reserve to the voters answering pollsters' questions about 2024. Investment banker Roger Altman on the bumpy road the central bank has walked to get our economy on solid footing.
And U.S. fiscal policy is not on the right track. And in my view, it's a matter of time before there is a reckoning.
We'll be right back. Welcome back to Squawk Pod. Here's Becky Quick.
Over the weekend, a geomagnetic storm was triggered by solar flares and eruptions from the sun. It resulted in a supercharged display of the northern lights in locations that don't usually see them. You probably saw pictures of this if you didn't see it yourself in the sky. The sky lit up pink, green, and purple hues in areas as far south as Louisiana, Alabama, and Mississippi, so the northern lights stretching pretty far south. On Saturday, Elon Musk's SpaceX warned of degraded service for its Starlink satellite internet service. Musk said in an earlier post that the Starlink satellites were under pressure from that geomagnetic storm, but were holding up so far. But again, if you didn't see this yourself in the sky, I bet you saw some pretty cool pictures in places you would never expect to see this over the weekend.
I think
it was cloudy here, so you couldn't see it here.
It was cloudy here.
Yeah,
I think you have to actually
missed it.
see it. Were you in Iceland?
I have been in Iceland, but I have not seen the
But you have
Northern
not.
Lights. That's still on my bucket list. I had a friend who actually happened to be flying and
During
took
this?
a picture from the airplane.
Oh, that's pretty cool. Our next guest says that the markets seem to be enjoying a Goldilocks macro environment and that a soft landing for the economy is at hand. For more on the markets, the economy, and much more, we want to bring in Roger Altman. He's the founder and senior chairman of Evercore. And Roger, we're very near all-time highs. Do you think the market deserves these valuations?
I do, because we're seeing evidence of the economy starting to slow. You see the first quarter growth was down a bit. Job growth was down a bit. Quits, vacancies a little weaker. Average hourly earnings growth a little weaker. And that should pave the way for downticks on inflation and then allow the Fed a little later to finally turn to ease. I personally think there'll be a rate cut in September. I don't know if there'll be more than that this year, but I think the markets are responding to the positive, to the positivity of this slowing, the prospects for lower inflation, the prospects for monetary ease, and that's why both equities and the fixed income markets have rallied strongly.
I think the big question is how long that process takes for inflation to come down.
Right.
We're going to get other hints this week or other readings with PPI and CPI both out. If those numbers turn out to be hotter than expected, would you take your idea of a rate cut in September off the table?
Probably, because the Fed has to see proof that inflation is improving. And, we have a CPI number this week. Market expects, I think, 3.6% annualized rate, a little better than the last print. But if that were to go the other way, I think markets would react quite negatively because they would see that the prospects for a rate cut are now more distant.
Let's talk a little bit about tariffs, because this is the news this morning. The idea that Biden's looking at raising tariffs, which we knew was coming, for things like EVs and solar panels. I didn't realize that medical items would be on that list too. And I didn't realize the number that's now being floated out there. Tariffs for EVs, something like 102%, which is significant. That's a fourfold increase from where we stand right now at 25%. That has to be symbolic to some extent, because even at 25%, you're not getting a lot of these cars into the market.
Well, I think what Biden is doing here, assuming that this rolls out as we expect, is trying to protect U.S. manufacturing, which he's obviously focused on reviving, and trying to protect the supply chain, especially as it relates to clean energy products. And also, China is falling back on an old, I would say, tired strategy, which is to heavily subsidize manufacturing, expand manufacturing production way beyond possible Chinese domestic consumption, and flood the United States and flood Europe with heavily subsidized exports. And when it comes to clean energy, where we need our own production, for example, solar panels, I think that's what Biden's trying to push back on.
And the reaction, you think, will be what? From the American manufacturers, from the markets?
Well, there's an ideological debate about tariffs. For example, Donald Trump wants to impose a 10% tariff on all imported goods. That's one of his cardinal approaches. And Trump was a tariff guy during his first term. So there's a big debate about, how helpful are tariffs really? Because at the margin, they're inflationary. But we're in an era where we're trying to rebuild American manufacturing, and we're trying, for example, with semiconductors, to avoid the obvious Taiwan risk of being totally dependent on TSMC for advanced semiconductors. And you have to have steps like this if you really want to do that.
Roger, the first hot inflation number that we got in January, February, that was like an outlier, seasonal inventories, blah, blah, blah. Then we got another, Were you surprised by what we saw? Or have you had this sort of, I guess, dovish view on inflation all along? And has your view been shaken? I'm just wondering, I'd like to believe you that we're going to see, cooler numbers for inflation, but that means that we've had like a series of outliers. And when does that become, when do you say, I was wrong? Maybe inflation is headed back to 4%?
Well, first of all, I'm not certain, Joe. I mean, I could certainly be wrong.
Right, you said it. If we get a hot number on
I could certainly be wrong.
Yeah.
But let's step back a minute. This inflation was caused, at least in my view, entirely by the pandemic. I think there's a lot of evidence on that. And so it's taking a long...
That's open to discussion,
it
too.
Is.
Yeah.
And we could debate that, but that's my own view.
Right.
And it's taking a long time to work its way out of the system. Now we're down to mid threes or mid to high threes on CPI, a little below 3 on core PCE.
Yep.
And so we're heading in the right direction.
Right.
I don't think there's much doubt that if the economy really does slow, like we just discussed,
that's also enough too.
Roger, you spent some time. You spent some time in the White House last Wednesday, I believe, with the president,
right?
Along with a whole bunch of other CEOs,
right?
What was he telling you about what he thinks the economy is going to look like over the next year, and what were you guys telling him?
Well, the purpose of that meeting was really for Biden to hear from a series of CEOs as to what they're seeing.
Okay.
It was interesting that a couple of, and I'm not going to mention names, but a couple of really leading CEOs talked about their inability to get enough workers. And in big numbers, I mean, really big numbers. And I think that's really significant at a lot of levels. But
it doesn't suggest a slowing job market, though, or a slowing economy that would come with that.
Well, I mean, the job market is hopefully is not going to slow dramatically, but we all saw the last month's number was lower, and I think it's probably going to get a little lower because it does correlate to growth. But we look, in a lot of quadrants of the economy we have, or sectors, we have a labor shortage, and that's a real problem. Listen, Biden obviously is not doing as well in terms of voter attitudes toward the economy as he would like. There are a little less than 6 months to go. In my own view, whether he starts to do better on that measure will depend a lot on inflation, because I think what he's carrying around as a burden is the legacy of this inflation, which Americans really don't like.
What was the second piece of that? It sounded like you were starting to say they talked about jobs and something.
Well, most of the CEOs in that meeting are very positive on the economy. How could they not be? I mean, we have, as I said at the beginning, rather a Goldilocks scenario: growth steady, maybe slowing a bit, equities and fixed incomes markets at a very strong level. Their own share prices right around all-time highs. How could they not be positive on the economy?
That's actually a good question. How could they not be positive on the economy? And yet, I think if you had a lot of them come around this table, they would somehow find a way to say that they're not happy with what's going on.
Well,
it just came from a grocery store.
CEOs always want perfection. They should. During my 2 tours of duty in the Treasury, business leaders always wanted something different. They always wanted an improvement here or a change there. That's natural. But they can see, and are some of them unhappy about antitrust policy? Yes. Are some of them unhappy about, say, the climate reduction legislation and carbon reduction regulations? Yes. But they can see the condition of the economy, as we just discussed, and they can see their own share prices, and they know conditions are pretty good.
Roger,
but is business ever going to say, wow, things are awesome, thank you very much?
Did the president do any finger pointing?
Sorry?
You're greedy. That's just for for public.
I'm just answering your question.
No, I know, but he does that a lot. In fact, the inflation is greedy corporations and shrinkflation. This is your fault, and a lot of corporate. You see it constantly corporate, and he doesn't do that when he's got the CEOs right in front of him.
I'm not there every day, Joe. I don't know,
but he didn't. He didn't in your meeting.
No,
okay.
He didn't.
Figures.
Roger, well, next time you're on, we'll have a longer discussion about other things that could be leading to inflation, like government spending. We talk every day about the CHIPS Act and what we're putting into that, and that could keep inflation higher for longer, too.
It could, and listen, U.S. fiscal policy is not on the right track.
Yeah.
And in my view, it's a matter of time before there is a reckoning. Could be a long time, because as you guys know,
right.
Markets often ignore something almost forever until they suddenly don't.
Right.
But it's not on the right track. Now, and there's going to have to be at some point, pact where spending is restrained and taxes are increased. At the moment, you would say that looks like 1,000 years from now, but then markets change,
so the
crises happen,
right.
and changes finally result.
Right.
But is fiscal policy on the right track? No, it isn't.
Thank you for coming in today, Roger.
Pleasure. Thanks for having me.
Next on Squawk Pod, what are you looking at? The co-founders of Warby Parker on what they are seeing in stores.
Whether they get a new prescription, whether they shop for glasses, whether they buy contacts, they can choose any part of that journey to take place online and any part to take place in stores.
And what's after glasses? Is there anything?
It's going to be a while before we have wearables that we're going to be wearing, 24/7. For sunglasses, you're taking those on and off for certain moments.
This is Squawk Pod from CNBC.
You're watching Squawk Box right here on CNBC. I'm Andrew Sorkin, along with Becky Quick and Joe Kernen. We got a lot going on. Warby Parker made its mark disrupting the eyewear industry with its online direct-to-consumer model. Now the company expanding its brick-and-mortar strategy, adding 41 new stores over the last year, with more to come, and it is working, folks. Take a look at the stock. Joining us right now in an exclusive interview is Warby Parker co-founders and co-CEOs Neil Blumenthal and Dave Gilboa. Good morning to both of you.
Good morning.
So here's the thing that's crazy to me. When we first met, now many moons ago, the whole idea was to do this online. It was supposed to be like the most capital light business ever. That was the whole concept. And now it appears that what's actually making this whole thing work, really work, is actually brick and mortar, like very old school. I think it's been directionally this way for a long time, but it clearly seems to have sort of accelerated recently.
Yeah, old-fashioned is the new fashion, so to speak. But when we launched in 2010, it was also a period before any of the social media networks had monetized. So it was very inexpensive to acquire customers online. Also, we would have expected online penetration of the category to actually expand faster than it has. And as you grow, right, you end up to take on more and more of the characteristics of the existing industry. So we found that the vast majority of folks in America want to go into a store, want to try on glasses, and buy them in person, and that's why we're opening so many stores. We're on a path to open over 900 stores. There's over 45,000 optical shops in the U.S., believe it or not.
What percentage of the business is now coming from brick and mortar versus online?
Yes, it's about 2/3 of our sales come from physical stores. We have around 250 stores in the U.S. and Canada. So 1/3 of our business is still online. It's still massively over-penetrated relative to the rest of the category. But we are seeing the majority of our growth coming from stores.
When do you think you realized this? And do you remember saying to yourself, did we make a mistake? The reason I ask is because the whole idea was this was going to be on the, everyone thought all sorts of products would be more available online. That's how people would do it. You've done things with that are cool with the app where you can see what the glasses look like. You can do your own eye test with the computer and everything else. Was there a moment where you're like, maybe it's actually a brick and mortar business and this whole idea of being online is not really how it's going to be?
We think one of the most powerful aspects of our model is the omnichannel ability for all of our customers to choose whether they get a new prescription, whether they shop for glasses, whether they buy contacts, they can choose any part of that journey to take place online and any part to take place in stores. And we're really the only retailer brand in our category that offers that choice for consumers.
I was going to say, how are you different than lens crafters then, if you're finding most of your customer acquisition is coming through the stores?
We find that people prefer experiencing sort of both digital and physical. So
once they're a customer, then they tend to use more online?
Yeah, or they'll even start the journey online first and try on some glasses using our virtual try-on before coming into the store, so being prepared for that visit, having a really seamless journey, whether it's sort of booking your eye exam, and then us knowing a lot about you so we can tailor that in-store experience to you. Which we find, right, is radically different than what you see at some of our larger scale sort of competitors. We also found that this was incredibly helpful whenever there's sort of disruption. So, right, during COVID, when all the categories started to shut down, right, we were still able to serve customers.
I hope that doesn't happen again anytime soon.
Us
That's
too.
not an advantage you're
Would
using
you
in the future.
try to talk me out of contacts? I mean, do you just not like me?
No, they sell contacts.
I know you do, but you'll be fine with me if I come in and get a prescription and order contact.
We'll
you won't say
still
you're not
love you.
fashionable. I can't look like you guys. You won't try to talk me out of it. Honestly,
we won't. We want to do what's best for you, and we see that in our sales retention rates. So we've had very consistent sales retention rates. Our customers spend over 100% with us within 4 years, and that's because we want to do what's best for our customers and patients. So you come in, you want contacts.
What are you seeing about
great.
the strength of the consumer in terms of which products are selling? Are they stepping down in terms of going from most of your lenses are still $95?
Yeah,
but once you put the lenses in, and you can, the prices go up and up and up. But have you seen sort of a shift in terms of what consumers are doing right now?
So there's no question that many consumers are feeling stretched. We feel fortunate to sell products that people need to see, regardless of economic cycles. And the median household income of our customer base is over $100,000. And so we've seen, I think, more strength than some other retailers and brands. And we're seeing actually a very strong uptake around some of our highest price point products. So we recently introduced a lens called Precision Progressives, which is this really innovative lens that offers a wider field of view and better vision, and it's the highest price point product that we've ever introduced, but we're seeing a very strong uptake because we're still offering much better value relative to our competitors.
This is going to be may seem like a curveball. What do you make of the Meta Ray-Bans that have effectively cameras in them, tech in them? There was a period of time where I don't think it was either rumored or you were doing it. You guys were focused on trying to figure out, whether you could become the next Google Glass.
Yeah, we think that wearables are interesting. That some of the existing products probably don't offer enough functionality that most people want to wear them all day, but that is going to change, and we think we have an important role to play there.
So how would you do that? Would you have to partner with somebody else? Are you guys working on anything like that? Do you think that we're still many, many, many years away from making this even work, so it's not even worth your time and money? What's the thought?
Yeah, it's going to be a while before we have wearables that we're going to be wearing 24/7. For sunglasses, you're taking those on and off for certain moments, but prescription glasses you're wearing all day. What is required from a weight perspective is vastly different. But we stay in close touch with some of the folks spending a lot of money in investing in technologies here. We have a very robust technology team which differentiates us from others in our category. So you'll see us continue to sort of make decisions on what do customers actually want, what are they going to wear.
Okay, final question. Are you now too big for Luxottica to actually try to buy you? That was always, remember, that was always the question in the beginning, whether they would just try to take you, just take you, because why not? But now I wonder whether regulators would even allow that given your size and scale.
Yeah, so we're building our business in a way that we don't need to be acquired. We're really excited about the path ahead. We want Warby Parker to be one of the most impactful brands in the world 100 years from now, and we think we're well positioned on that journey.
And always glasses, because there was also a period of time where you guys were thinking of other stuff.
Yeah, we think sort of those brands that are most focused tend to win. So we want to help people see. Our mission is vision for all, and that's what we're focused on.
See, focus, glasses.
Lots of
Vision
fun.
for all.
Neil and Dave, thank you.
Like it.
Appreciate it.
And that's Squawk Pod for this Monday in May. Thanks for starting your week with us. Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin. Tune in weekday mornings on CNBC at 6 Eastern. Stream on Peacock as part of Morning News Live. Or get the smartest takes and analysis from our TV show right into your ears when you follow Squawk Pod. And you can listen anytime. We'll meet you right back here tomorrow.
We are clear. Thanks, guys.